Well, hello and welcome to this midday market mood check with me Nandita Khemka and my colleague Yatin Mota. Well, Yatin, it's turning out to be quite a marvelous Monday for the markets given the kind of fall that we had seen on Friday. Looks like markets have digested or taken in stride the STT hike that was announced on F&O contracts on Friday. Well, if you look at the Nifty, that is up by nearly triple digits, like a 100-point up move, near above that 17,050 mark. Pharma is clearly the top gainer today. A lot of these pharma names like Sun Pharma, Divi's Lab, Apollo Hospitals are among the top Nifty gainers. All the other sectors are also doing pretty much well, except for the realty pack that was down somewhere around 1% last time I checked. Nifty Bank is also not doing all that badly. It was up somewhere around 0.3% when I last checked. Mid and small caps were doing okay, but I think it was a small cap pack that was underperforming. It was down 1% when I checked last. Mid caps are now in the green. If you look at the top Nifty gainers, you have Reliance Industries. There's a Kotak Securities report that says that Reliance is a compelling buy after the kind of correction it has seen. On the back of that, that stock is among the top Nifty gainers. If you look at Sun Pharma, quite a few news pegs around this counter. Credit Suisse has upgraded the stock to outperform. And another piece of news is that the company has acquired a company 60% stake in Vivaldis Health and Food for 140 crore rupees. That will also bode well for the top line of Sun Pharma. And the third news peg is not very positive. There's an IT security incident on the 2nd of March, due to which some of the revenues of some business may be hit. How much, the company doesn't know. It is still evaluating, and it will have to spend some amount for the remedial measures. So that was one negative, but aside of that, shares are doing pretty well. Lupin has got USFDA approval for a drug. Because of that, the stock is up somewhere around 5%. Autos were not doing all that well. Because there was a report by Bank of America on tractors, which wasn't very upbeat. It has downgraded M&M, to neutral from buy, and has also cut target price. Escorts also features in that report.
No, it's
Yatin?
only M&M that's the downgrade, because I think BofA feels that the tractor sales, the best is behind us, and for the UV business, which is the SUV business for Mahindra & Mahindra, where there was significant traction. And the outperformance of Mahindra & Mahindra in the last 12 months is on the hopes that the volumes in UV will be much higher than what it was last year. But BofA does feel that the street is overestimating the potential of the SUV business of Mahindra & Mahindra, and that is the reason why they have downgraded the stock. They have cut the target price from 1,500 rupees to 1,320.
Right, but even on the tractors business as a whole, the tractor segment as a whole, BofA says that if El Nino was to play out, the entire hit on the industry will be somewhere around 8 to 10%. And that is why it is fairly downbeat where tractors are concerned. So if you look at the other Nifty gainers, as I mentioned, you have Reliance Industries, Sun Pharma, Apollo Hospital, you have Divi's Labs and Hindalco among the top Nifty gainers. Among the losers, you have Adani Twins, you have M&M, Axis Bank, ICICI Bank. So financials not doing all that well, even though the Nifty Bank Index was marginally in the green. Aside of that, some other mid caps in news, Phoenix Mills and the likes. So Yatin, you would want to throw some light on that?
So I think Phoenix Mills, Morgan Stanley has come out with the initiating coverage 1,700 rupees target. They do believe that the mall and the consumer culture and the positioning of Phoenix Mills is good, and hence they are bullish. I think 10 days back there was a Motilal Oswal report also on Phoenix Mills. So I think multiple brokerages really coming up for coverage as far as Phoenix Mills is concerned. We also have Crompton Consumer in news because they are merging themselves with Butterfly Gandhimati, the acquisition that they had done few quarters back. 22 shares of Crompton will fetch you 5 shares of Butterfly Gandhimati. That is the swap ratio. But yes, this was probably in the offing. It was almost known that these two entities will merge, and probably hence the stocks are a bit soft. And if you look at the small and mid cap end of the market, that is quite weak today because we opened slightly lower. The advance decline ratio is also 1:3. So clearly the mid cap end of the market is not doing well. Yes, as Nandita was mentioning, the large caps, the likes of IT stocks, Reliance, all of them are moving up in trade, and probably that is the reason why we are looking at 100-point plus gain on the Nifty right now.
Right. If you talk about some other movers, Nykaa was under pressure. As many as 5 top-level exits had happened in that company. But Jefferies has maintained the target price. It says that, according to the scale of the company, the exits aren't as, substantial. So because of that, the shares were down, but not that much. Aside of that, the cues coming out of the global markets are pretty good because US futures were in the green, European futures were in the green, Asian markets were pretty much mixed, but nevertheless positive cues coming out of there. Again there is a development on the global banking front. SVB deposits and loans will be bought over by First Citizens Bank. So that is one global development that markets are keeping an eye out on. But when you look at the second half of trade, given the fact that there is weakness in the broader end of the markets, do you expect the gains to fizzle out? Because that's what we seem to be doing.
So I think it's typically the month of March. Global things are not improving, at a pace that we want. So I think market will consolidate, move in a range, and if you look at the options market, there has been a lot of put writing which is happening in at 17,000 level. So probably that should act as a support is what experts believe. But yes, it is very difficult to trade the market. So be cautious there. Trade with proper stop losses, especially on option trades, because we are seeing a big swing for the last 5-7 sessions, especially Nifty Bank. So trade with extreme caution, and obviously if you are an investor, you can buy in small buckets and keep investing in the markets. But yes, the market is unpredictable, and probably for the next 1 week, because we are on the fiscal year end, March end, a lot of adjustments are likely to happen, and hence the market should be most probably in a range bound trade. Plus we have the global cues which are still evolving,
right?
So after the SVB bank thing which Nandita mentioning, that First State Bank is First Citizen Bank is looking to acquire and move things forward there. But again, we have the Deutsche Bank issue which is coming up. So a lot of things are moving quite fast in the global market, and it is quite difficult to catch these macroeconomic changes. So yes, volatility is here to stay, and probably the market should be range bound for the next 4 or 5 trading sessions.
So the India VIX was up to 2% or so when I checked last, and don't forget that we have the monthly expiry as well on Wednesday, because we have a truncated week this time around. And next week the all important RBI MPC meet, first of the next fiscal, right? So first of FY24. So to say, though, Street is expecting a 25 basis point rate hike after what the Fed rolled out in its last meeting. So we'll of course be keeping an eye out on that as well. But for now, I think we are done with this mid-cap, midday market mood check, and Yatin will be back with the closing, closing bell to take you through how the market shut shop for the day. But for all your other news and financial updates, do follow moneycontrol.com.